I'm going to talk about what's happening in the corporate sector in Ukraine. And Sergei's slide was excellent as a good introduction to what I want to talk about, because the most important thing is to understand from a banker's point of view, what are these economic factors doing and how do they affect corporations in the country. And the corporate financial life, you might say, is very important vis-a-vis the whole growth of the economic sector in the country. So we're going to take a look at some things that are happening over the last few months in the corporate sector and how a bank looks at this in terms of a risk profile and what kind of advice that we're giving to corporations given the very specific challenges that they face. Okay, so what I'll do in the next few minutes is I'll summarize the various risks that companies are facing, Ukrainian companies are facing. I'm going to tell you how that affects their balance sheet and their financial strength, and then what I will do is I will propose some very commonly accepted solutions to these risks, some of which are possible, some of which are not, but it's a menu of resolution, you might say. Okay, here we go. So first of all, I'm referring back to the slide you saw from Sergei of Nadra Bank. Right now, there are many, many different stresses. Can we maybe lower the light a little bit, just in case people can see? There's many different stresses affecting the corporate sector in Ukraine. And what I'm going to talk about this morning is more what we see with Ukrainian corporates, much less with multinationals. There's a few reasons for that. I'll explain that in a few minutes. Well, first of all, you all know this. From the beginning of the year to where we are now, there's been a 45% devaluation of the FX rate. That is a very serious shock that everyone has experienced, and it came quickly and it came very large. It came quickly and it came very large because of the incorrect policy of the previous government of taking every possible measure to hold the rate at 8 for political reasons. There was no reason the hryvnia should have been 8 to $1 for the last 3 years. And what was done, which has created all of the challenge that this country faces now in terms of macro fiscal pressure, is one, it used FX reserves to hold up the rate, not the correct policy. Second, it used interest rates and liquidity to hold up the rate, not the right policy, which is why we have a recession right now. And third, it ignored every common yardstick for the true value of the currency, which for 3 years we have been saying should be around 10 and not 8. All of these trends were ignored to the detriment of the national economy, and now you see why we're at 11, 11 and a half. If the right policy was done over the last 3 years, there would have been a gradual devaluation. Companies would have known what the strategy was, what the message from the government would be. They would be able to adopt to this in a more measured manner, but this was not provided. No one had this opportunity. Everyone thought it should happen, it didn't happen. How do you plan your business when you don't really know what's supposed to happen vis-a-vis this very important rate? So this happened already, 45% devaluation. What else happened? The GDP is contracting. There's a recession this year. Sergei, his slide said 3%. I don't think so. I think it's going to be at least 5%, and there's quite a few people, economists, saying it could be as bad as 10% devaluation. And this second quarter is not a pretty quarter because all of these pressures are all coming to roost, are all materializing now. So we believe that GDP is more likely to contract by at least 5% this year, hopefully not 10 because that's really bad, but even 5% is quite a challenge. Yes, next year it should grow somewhat. Some people say between 1 and 2%. 3.5% would be, of course, preferred, but we're not sure about that right now. What happens when you have rapid devaluation of your currency? And what happens when you are a dollarized economy and all of the imports are tied to dollars, so much of the consumer basket is tied to dollar? You have inflation. So this is shock number 3, all coming at the same time. The current state estimates are between 10 to 15% inflation. It may be more. When you go to the supermarket, perhaps you don't think that it's 10 or 15%. You're probably thinking it's much more than that. And if you're being paid in hryvnia, you're probably thinking, well, when is my employer going to increase my salary? Because I am feeling personally a real hit. Well, corporations, Ukrainian corporations that are not 100% exporters, they are feeling the same hit each one of us here is feeling. That's shock number 3. Shock number 4, again at the same time, is great political uncertainty. Great political uncertainty in the first half of this year due to the revolution 2 months ago, due to Russia creating all of this stress on the eastern border, due to Crimea being ripped away from Ukraine, which means for virtually every company, on average, at least 5% of their business doesn't exist anymore. That corresponds to Crimea being roughly 5% of Ukraine's GDP. In some sectors, like in pharmaceuticals, interesting, it's about 8%. But on average, when I talk to my clients, Crimea represented about 5% of their business. So you have these political events that within a very short amount of time have created great instability. And what happens? Well, you know, everyone's noticing this. Moody's, all the rating agencies have decreased and decreased and decreased the country rating of Ukraine now to CCC flat, which is almost default status. Very serious. And of course, what I'm not mentioning here is that the IMF program is going to be approved, we hope, next week. It's going to start dispersing in May, but without that, there's enormous challenge. No one will lend any money, will increase their loans unless the IMF program is working, is dispersing, brings in the EU money, the US money, other even money from Japan. This is so critical, and this is all related to the country's situation. So this is stress number 4 that every Ukrainian corporation has, and that banks look at. Stress number 5, and they're all interrelated, surprise, surprise. Stress number 5 is liquidity cost and liquidity availability. What do I mean by that? Well, if you're borrowing money from any Ukrainian bank or international bank, because of these risk factors, the cost of your debt is getting higher. Banks will reprice this risk, and they're not going to lend to you at LIBOR plus 4 like last year or LIBOR plus 6. It'll now be LIBOR plus 8, LIBOR plus 10, LIBOR plus I don't know what. But the price is going higher. It reflects the risk. And what it also means is that if you are a weaker borrower, you may not get any financing at all. If you're a weaker borrower, when your loan matures, the bank may not be willing to extend the loan to you again, or the terms and conditions will be very different. And that means that you as a Ukrainian corporate have significantly more liquidity risk. What happens if I can't get this loan renewed? Who am I going to go to? Where am I going to get the source of funding? I may default. Sometimes, some banks, especially Ukrainian banks that haven't hit the stress test yet from the central bank, they will just renew the loan because they have no choice. They have to renew the loan, otherwise this Ukrainian corporate will just default. There is no other alternative. And that is going to happen a lot in this year for sure. That will affect how banks consider their non-performing loans. That will come into play when the NBU progressively performs more and more stress tests on Ukrainian banks. And I'm talking international banks here as well, but there's a very large percentage of Ukrainian banks that will not pass this stress test or will be having a lot of trouble. Stress number 5. And stress number 6, well, you know, I don't think that all of these stresses together represent a normal situation. They represent a severe challenge to the corporate sector here. And because it's a severe challenge to the corporate sector, it's a severe challenge to the banking sector because we are working with these corporates. What can we do to maintain liquidity? What can we do to help maintain the ongoing health of the Ukrainian corporate sector when in general, you have all of these stresses at the same time? So, what do these stresses cause? Let's go to the second part of the slide. First, because of devaluation or because of the economy contracting, because of consumer sentiment changing, their purchasing patterns are reduced, they modify because of Russia closing the market for a lot of Ukrainian exports or other dynamics in individual markets. Most Ukrainian companies are having a harder time maintaining market share and maintaining their revenues. And of course, this translates into their financial health. Second, we talked about profitability going down. So its profitability is reduced because for many Ukrainian companies that are not 100% exporters, all of a sudden they have to import goods. If they're importing goods at higher cost, can they pass these costs to their consumers 100%? I'm not so sure. So there's going to be a reduction in profitability in order to maintain market share. Companies react in different ways, but this is a real stress. We talked about higher funding cost. Well, you know, another thing hitting your profitability is your cost of debt, if you're a borrower, has gone up. When you renew that loan the next time, assuming your bank or banks are willing to renew this loan, your cost of debt is going up. And that means your profitability and your cash flow is going down. This is another direct translation of these risks that are happening on all of the balance sheets of Ukrainian companies right now. The fourth is, we talked about liquidity challenge and cash flow. One other factor, and this is with regards to banks, this is a very interesting new stress. For Ukrainian banks, any bank out of the 178 banks in Ukraine, there's a ratio called the N7 ratio. It's the amount of a loan you give to a particular client over your capital. And your capital is in hryvnia. What happens if you are a bank and you are giving loans in US dollars to your Ukrainian corporate clients? And your capital is in hryvnia. Well, guess what? Your capital just decreased by 45% in dollar terms. But that US dollar loan that you gave, that didn't decrease at all. So that means for a lot of banks here, they're having trouble with N7 ratio because if they've given loans in dollars, that loan divided by the capital in hryvnia, which is much less, that ratio has changed now. And you're not allowed to have more than, say, 20-25% of your capital to any one client. So many banks are having a trouble with N7 ratio. How can they resolve that? There's three approaches. They go to the NBU and they say, hey, help me, I've got a problem here. Or they inject more equity. They may not want to inject more equity because they don't have it, or they're very worried about those other problems in Ukraine, so that's not very attractive. Or the third option is you call the client up and say, listen, I have an N7 ratio problem, please repay my loan, or please repay some of it because I have to get back to this ratio. All three of these options may not be available for every bank in this situation. What's going to happen? So this is a new challenge as well that we haven't seen before to this extent. Okay, what else? Another issue that clients are having is it's not just their problem, it's their customers' problem. So their whole working capital cycle is under stress. If you're selling to weaker Ukrainian, smaller companies, or you're selling to Turkmenistan or other countries in the CIS region, well, maybe they're not able to pay their obligations to you by contract at the same time, on time. So all of a sudden, you have a situation where some of your clients can't pay on time, or the amount of clients not paying on time has increased, and that affects your cash flow. So that's something that we're seeing as well, and that forces clients to basically re-look at their own customer base and assess their credit policies. What is my risk now of one of my clients defaulting on his payment obligation to me? This risk has increased over the last few months, particularly in this country, but we also know of clients in the region that are not paying. And how about this ridiculous situation that some clients have, that they're exporting to other countries and they're waiting for payment, and this client in this country is saying, well, I think you're going to be invaded by Russia, so maybe I'll just not pay. I'll see what happens next month. There's even situations like this where some foreign clients are basically delaying payment to see what's happening in this country. This is, again, a new phenomenon. Not very prevalent, but I know of a few cases like this as well. So one more stress that's affecting the balance sheets and the financial dynamics of Ukrainian corporates here. Another stress that we're seeing is, again, between the banks. Banks are looking at this situation. Banks are evaluating their loans and evaluating their loan covenants, and there are discussions between banks and Ukrainian corporate clients about, well, how are you managing on your loan? Are you going to default on this debt to EBITDA ratio? Are you going to default on this covenant? So there is a lot more concern by banks about whether the Ukrainian corporate sector can honor their existing loan covenants. And it's very important for Ukrainian corporates to recognize what is the increased risk that I have of not meeting my loan covenants. It can lead to default. It will lead to much more stress and time and money spent to reorient loans, readjust loans that no longer are properly structured given this current stress that many companies are facing. So there is a higher risk of loan covenant violation now. Another risk is ongoing business. If you're worried about your source of liquidity, if your profitability is down, if some of your clients are not paying on time, if you're not sure about your future relationship with your bank and that bank's willingness to continue to provide affordable, reliable liquidity, what will you do? You will reduce costs, you will reduce CapEx, you will postpone critical investments that you might need to do now, you will postpone perhaps critical replacement of existing machinery, which you should never do because this is an ongoing need. So a lot of Ukrainian corporates are looking at basically postponing CapEx. This is another effect of all of these stresses that we're seeing. And that, of course, over the medium term is very risky for any company to postpone what we call essential capital expenditures. And finally, another risk that companies are facing, this depends. If you're a public company, your share price is down. You have investors to deal with. You may have had a dividend policy that investors or shareholders are expecting. There is stress on that as well because of all of these many challenges. So, I'm not trying to depress you at all, but I'm giving you a very real dose of realism here about what is happening and facing many clients that we have in the country. Okay, let's go to the next slide. Given what I just said, slide please. Okay. Given what I just said, in terms of all of the challenges and facing companies and why they were created, all of the different risk factors, what options and what strategies are available for companies to take to counteract this challenge? Well, there's many things. Now, I'm not saying that every company can do this, but this is a pretty simple menu of options and things that companies should be thinking about. Well, first, of course, is FX hedging strategy. Every company should have a view about how they're managing FX risk as affects them. It's not very easy, and it's not very cost-effective right now to hedge because the markets are very volatile. If you had done this last year, you would be in better shape. If you're doing it now, your options are reduced. It's more costly. It may not totally work. But every company should have an FX hedging strategy. And by the way, Citi's forecast for the hryvnia to dollar rate is that we expect that after the elections, things should stabilize and the fair value of the hryvnia should be somewhere between 10.5 and 11.0. Now, we could be wrong, but that's our current view of where the hryvnia should be by year end, assuming a stable scenario in the country. Another thing that you can do, of course, is that if you're facing pressure on your client base, on your markets, you have to take steps to develop new markets, particularly if you were exporting to Russia and the CIS zone. That's 30% of the exports of the country. Many companies are already taking very strong efforts to reorient their markets and develop new markets in Latin America, in the Middle East, in Asia, in the US market, in Western Europe. So it's very important to have an active market development strategy to counteract the negative effects of what the Ukraine-Russia trade has been over the last year, for example. Of course, it makes sense to reduce costs. You know, the good times are perhaps over for the next few months. How can you reduce costs to offset the other pressures that you're having? A fourth strategy is it possible to raise new equity, either in the markets or from shareholders or subordinated loans? If your balance sheet is becoming very weak and your cash flow is very much in doubt, is there any external source of support to keep company liquidity going? So that's a fourth area. The fifth strategy is tighter credit policies vis-a-vis your own customers. Be very careful about extending credit to other clients which you think are also feeling the negative effects of these stresses, because you may have your own credit problems with your own suppliers, with your own customers that you didn't have last year. That dynamic is changing. You have to look at revising your credit policies on business-to-business relationships. Another thing that you have to do, I hinted at this on the previous slide, is proactively engage your creditors, the banks that you work with. Let them know what your situation is. Think ahead. Will I violate a covenant? Do I need to refinance this loan? Do I need to restructure it? Do I need to talk to new banks? If my existing relationships with my current banks are not enough anymore. Do this in advance, because if you wait to the last minute, it's too late. And you know, negotiating with a bank is not a one-day event. You need time. You need to have that right communication. So another thing that we advise is that proactively think, where will I be in 3 months? What do I need to do? Don't wait now. Banks will appreciate that. Even if you feel that you're going to default on an existing loan, the bank that you work with will appreciate that you've gone 3 months in advance and said, I'm going to have a problem, rather than wait to the last minute. No one likes bad surprises. Another thing that you can do, depending again on who you are and how big you are and the nature of your business, is if you haven't been talking to IFC, EBRD, export credit agencies, these are very good sources of funding that are more development agency type funding rather than commercial bank. They often offer long-term financing at fairly attractive rates. So if you're a Ukrainian corporate, you might want to be looking at developing these relationships if you have not done this previously. And this, of course, this takes 6 to 12 months. These kind of agencies do not grant loans overnight. It's, again, a strategic direction that you should consider. And finally, again, diversify your funding base. Look at what banks you're working with, look at your other sources of funding, and come up with a new strategy, because the stresses that I've talked about on the previous slide, they are not just existing in the second quarter. They will be with us more or less for the whole year. So it's time to take these kind of steps to, you know, positively re-engage your situation as a Ukrainian corporate client and protect yourself. So what I've done in the last 15-20 minutes is basically take Sergey's initial slide and translate that into what we're seeing in the Ukrainian corporate sector. What are the risks? What are the manifestations of these risks on a company's balance sheet and business model? And what kind of strategies and tactics can companies use to counteract this? So I'll leave and I'll finish at this point, and of course be happy to answer any questions that you have. Thank you very much.